Hear me?
Yes, sir, we can hear you, sir. Good morning, sir.
Okay. So, last week we start solving question on personal income tax. So far, we have solved about 4 questions on personal income tax. Today will be our last question. We are going to solve the last question on personal income tax today so that we can move to the next topic. So, the question we are solving on personal income tax. Let's solve question 6. Question 6. So somebody should help us read the question 6. Question 6. That is the question we are solving. So you can help us read it. Hello. Question 6. Mr. John Agin live in Ikorodu area of Lagos, but has a business known as JA Venture, an industrial starch producing organization located in Ibadan, Oyo State. For the year ended 31st December 2023, Mr. Jones Agins, who is a legal practitioner, completed a tax form A and forwarded it to the relevant tax authority with his income and expenditures profile attached. The following were extracted from his profit statement for the period ended 31st December 2023. Income. Under the income, he has profits, gross profits for starch business, income from rent, net, income from legal services, gross, proceeds from disposal of 2 motor vehicles, total profits for the year, 32,600,000. For the expenditures, we have salaries and wages, we have purchase of legal books, office rents, government rates, subscription, donation, depreciations. At the end of the day, there is a net profit of 7,240,000. On invitation to tax office, the following additional information was obtained through the interview with Mr. John Agin. 900,000 of the amount of salaries and wages was for the driver of Mr. Agin's wife. Subscription comprises of 150 for Mr. Agin's wife, who is also a chartered accountant, and 200,000 for Mr. Agin himself, who is a lawyer. The balance for the employee of John Agins and co-legal practitioners. 50% of government rates and electricity is for personal house of Mr. John Agin. Capital allowance agreed with the revenue service is 150 of the value of depreciation. E. Mr. Jones has a life assurance policy with Save Life Insurance Company and paid a premium of 1.5 million per annum on April 1st, 2023. You are required state the tax assessment year of Mr. John Agin. 2. State which tax authority will Mr. John Agin remit his tax. 3. State the value of withholding tax on rent remitted on behalf of Mr. John Agin. While 4. Compute the tax liability of Mr. John Agin for the relevant year of assessment. So my question, the first question, 1 mark, state the tax year of assessment. In this question, what is the year of assessment that we are going to assess Mr. John Agim to tax? What is the year of assessment? What type of income that Mr. John Agim earn? What type of income Mr. John Agim earn? Hello, are you with me? Hello? Hello, can you hear me?
Yes, sir. We can hear you, sir.
Okay, what type of income Mr. John Agim earn? Is the income is coming from his business?
Is on earned income.
Hello, can you hear me?
Yes, sir.
Hello? Hello, everyone. Can you hear me?
Good morning, Mr. Isaac. We can hear you.
We can hear you, sir.
Hello, can you hear me now?
Good morning,
So,
sir. We can hear you.
okay. So, since the year ended in this question is 2023, so the year of assessment will be what year?
2024.
2024 year of assessment. So that will be the year of assessment, 2024 year of assessment. Now, second question said, to which tax authority will Mr. Agim remit his tax to? Where does Mr. Agim stay? Mr. Agim, where does Mr. Agim reside? Mr. Agim resides in where?
Lagos State.
In Lagos State. Area of
Mr.
Lagos
Agim
State.
Ikorodu. So which tax authority will Mr. Agim remit his tax to?
LIRS.
Lagos State Internal Revenue Service. Do you understand?
Yes.
Lagos State Internal Revenue, because he resides in Ikorodu area of Lagos. So Lagos State Internal Revenue Service. So Mr. Agim's second question, this is the answer. Mr. Agim will remit his tax to Lagos State Internal Revenue Service, being the tax authority in charge of the residents of Ikorodu, where Mr. Agim is residing. Do you understand? The third question said, state the value of withholding tax on rent remitted on behalf of Mr. Agims. One of the income of Mr. Agims is rent. If you look at the income side of Mr. Agims, one of his income is rent. This income from rent that they write net, what happened? Why they write net? Who can explain this? Why they write net?
That's after agency fee has been deducted, and I don't know. I guess so.
Because they have deduct withholding tax. Withholding tax deducted from this rental income. Abi? That is the reason why they write net. If they write gross, it means withholding tax has not been, is before deduction of withholding tax. But since it's net, it is the net amount is going to receive after deduction of withholding tax. So for us to gross it back, how do we gross it back?
We do 10% of the net. We add
That would
10% of the
be
net.
No.
90 divided by
over
100.
100 over what?
90.
90. You know, withholding tax on rent is 10%.
Yes.
So when you minus 10% from 100, it will give you 90. That means this 10.8, which is the net amount, is 90. So we
Okay.
have to get the gross back. If we want to get the gross, 100 over what? Over 90. So 100 over 90 times 10.8. That will give us what? 100 over 90 times 10.8. So the 100 over 90 times 10.8 is going to give us how much? 12 million. Can we all see that? Hello, can we see that?
Yes, sir.
100 over 90 times 10.8. It will give us 12 million. Once we get the gross amount, how do we get withholding tax on that rent? How do we get withholding tax on rent? Since we know the gross amount now. For us to get the withholding tax on the rent,
That is 10% of it.
It will be 10% of the 12 million.
10% of the gross amount. The 10% of the gross amount will give us the withholding tax on rent. 10% of 12 million, it will give us 1.2. Or what we can say the gross amount minus the net amount. The gross amount minus the net amount. We are going to get the withholding tax on rent. Look at my solution. If the withholding tax on rent is 12 million minus 10.8. 12 million is what amount?
The gross amount.
That is the gross amount.
10.8 is what amount?
The net
The
amount.
net amount.
So your withholding tax is how much?
1.2.
1.2.
Is 1,200,000.
Yes. Another way to get your withholding tax. 10% of the what?
Gross
Of the
amount.
gross.
Of the gross amount. You get your withholding tax. Do you understand?
Yes.
Why Mr. John Agim is disclosing his income? He must disclose his income at the gross amount. This rent that was stated in the net amount as part of Mr. Agim income is understated. You have to ensure that we had the balance to make it gross. Why Mr. Agim is disclosing his income? Any income that attracts withholding tax, if you want to do computation and you want to disclose that income, you must disclose it at what amount? Is it at the gross amount or at the net amount?
Gross amount.
At the
At
gross
the gross
amount.
amount. So look at Mr. John Agim. Why is disclosing his income? He went to go and write net, rent net. He discloses at the net amount. To make this 10.8, what can we add to this 10.8 so that it can be at gross? What can we add to it?
1.2.
1.2. That means if we are computing adjusted profits for Mr. John Agim, we are going to add that withholding tax amount as part of his income. Why do we add it? We want to ensure that this 10.8, we want to ensure that it completes 12 million. Do we understand? Do we understand?
Yes, sir.
So the next question, we are asked to compute the tax liability of Mr. John Agim. How do we compute the tax liability of Mr. John Agim? First thing we need to do is for us to compute adjusted profit. Adjusted what? Profit. If you want to compute adjusted profit, what is the first thing to write if you want to compute adjusted profit?
Net profit.
Net profit. Please, others, do you understand?
Yes, sir.
Net profit. So in this question, what is the net profit of Mr. John Agin business?
7,240,000.
So we write it 7,240,000. Can we all see that? We now add withholding tax on rent deducted. We add withholding tax on what? Rent deducted as part to his net profit. Why do we add this withholding tax on rent deducted? Why do we add it? This 1.2 million, why do we add it to the profit?
Because it was
Because that rent is stated in the account at net instead of what?
at gross instead of net.
Instead of gross, is stated at net instead of gross. Is stated at net instead of what? Gross. Is stated at net instead of gross. So for us adding this 1.2 back, that means we want to make sure that everything is stated at gross. Now, we add back the salariable expenses. If you want to compute adjusted profit, we add back the salariable expenses. Let's go to the expenses side of Mr. John Agin. Salaries and wages. Is it allowable expenses or disallowable expenses?
Allowable expenses.
Allowable expenses. Provided that there is no additional what? Information. Provided that there is no additional information. Can we check? Do we have additional information pertaining to salaries and wages?
Yes, sir.
Oh yeah, let me read the additional information.
9,000 of the amount of salary and wages was for the driver of
900,000.
900,000 for the amount of salary and wages was for the driver of Mr. Ajim's wife.
Not 9,000. Where do you see 9,000? Hello, sir.
900,000.
Hello.
Where is it,
So
sir?
this 900,000, we are going to add it back as disallowable expenses because it's for Mr. John Agin driver. John Agin driver wife. Mr. John wife driver. So it's not allowed. It's private expenses. It's not for the staff of the company, of the business. He was driving the wife. Do you understand? Do you understand? We are going to add it back as disallowable expenses. That 900,000 will be added back as disallowable expenses. So if you check my workings, 900,000, salaries and wages, private, 900,000. Salaries and wages, private, 900,000. So it will be added back. So let's go to the expenses again. For the expenses, purchase of legal book. Purchase of legal book. Is it allowable expenses or disallowable expenses? Purchase of legal book. Is it allowable expenses or disallowable expenses?
Business. It's allowable. Huh? It's disallowed.
Eh? Why? Why is
Because
it
the book
disallowed?
is for because the book
So
is for the Mr. Ajim's, is for his own
it's,
personal use.
No, he's a lawyer. And even
it's a
income coming from his legal business is part of his income. It's allowed. But the reason why we disallow this legal book is because this legal book can be capitalized. It can be what?
capitalized.
Capitalized. It's a capital expenditures. They are not going to use the legal book for 1 year and finish. It's not like a A4 paper. They are going to be using it for more than many years. Abi?
Yeah.
It's an asset
Okay.
because it's for business. Part of his income is coming from legal. It's allowed. But the reason why we are going to disallow it is because it is capital in nature. Do we understand?
Yes.
So we disallow that legal book. That legal book will be disallowed. So if you check our calculation, legal book is disallowed as part of disallowable expenses. So this is legal book disallowed. Second one that we picked that was disallowed.
Is there no addition? Okay, there's no addition.
So the legal book is disallowed. The next one that will be disallowed, office rent. Is it allowed or disallowed?
Office rent is is
It's
allowed.
a liable expense.
It's allowable
It's allowed.
expenses, provided that
Yes.
there is no additional information. Do we have additional information that affect the office rent?
No.
No. We allow it. Government rate and electricity. Is it allowed or disallowed?
It's allowed.
Allowed.
Is it allowed?
Yes, it's allowed.
Is allowed, provided that there is no additional information. Can we check? Do we have additional information on government rates?
Yes.
Yes.
What is the additional information on government rates?
50% of government rates and electricity is for the personal house of Mr. John.
So that means how much are we going to disallow from the government? Because the one of personal house is not for business. Do you understand?
Yes. Yes.
So how much are we going to disallow for government rate and electricity?
50%.
50% of 1.8.
That is 900,000. 900,000. 900,000. So government rates, 900,000. We are going to disallow that. Let's go back to the expenses side again. Subscription. Subscription. Is it
It's
allowed
allowed.
or disallowed?
It's allowed.
Disallow.
It is allowed, provided there is no additional what?
Information.
Information. What is the additional information? Do we have additional information?
Yes. B. Subscription comprises of 150 of Mr. John Adam's wife, who is a chartered accountant, then 200,000 from Mr. John Adam himself, who is a lawyer, and the balance of the employees of Mr. John Adam and Co.
Okay,
Legal
do we have
partition.
anyone to disallow?
No.
Yes, for the wife.
For the
Thank you
wife
very
and
much. The wife will be disallowed, but for himself, he's not going to be disallowed. Why?
yes,
Because
this is
he's a lawyer. He can pay subscription for himself. And that subscription is for the purpose of his business. Because if you look at his income, some of his income is coming from legal fees, Abby.
yes.
So the only one we are going to disallow is the one paid for his wife. Do you understand?
50,000.
So subscription. $150,000. So after subscription, let's go again. Which other one do we have?
Donation to Ikorodu
Brothers Club.
Ikorodu Brothers Club. I know of this club. They are philanthropic club. They normally assist people, do a lot of social responsibility and so on like that. They are good. So are we going to allow them or disallow them?
Disallowed.
Disallow them.
Allowed.
Why? Despite all what I said about them.
It's his personal association. It's not for the business.
Business.
When the only donation that is allowed is when you donate to NGO or you donate to public institution. When you donate to public institution like general hospitals
Social.
and so on like that. Do you understand?
Yes.
It's allowed. When you donate to government institution, you donate to NGO, they are allowed. But when you donate to club, even if you donate to Rotary Club, it's not allowed. Do you understand?
Yeah.
Yes, sir.
So we are going to disallow this donation. Second one, depreciation. Is depreciation allowed or disallowed?
Disallow.
Disallowed.
So donation is disallowed. Depreciation is also disallowed. Do we understand?
Yes.
After depreciation, look at another one.
Cost of
10%
On
ordinary share in ABC PLC. They go and buy share in ABC PLC. They buy 10,000 share in ABC PLC as an investment. Is it allowed or disallowed?
is allowed.
Disallow.
Why is it
It's
disallowed?
Because it's not the investment, it's an investment, not an expense.
Thank you
And
very
that
much. It's not an expenses. It's an asset. When you buy an investment, what will happen to your balance sheet? Is it not going to be in your balance sheet, Abby? As an asset, Abby?
yeah.
So
Yes.
why are you expensing it? It's not an expenses. It's not an expenses. It's an asset. Do you understand?
Yes.
There is nothing wrong of doing investment, but you can't expense it because it's an asset. It's still going to show in your financial position, statement of financial position as your assets. So after that, the next one, look at the next one. Provision for what?
Doubtful debt. Disallow.
Allow or disallow?
Disallow.
Why now? Why is it disallowed?
An expense.
Because it's not specific, it's general.
And in general, yes.
It does not know if
Because
it
it's
will.
not specific, it's general.
Yeah.
I thought there is a topic that we discuss, adjusted profit, Abi. I
Yes.
explain what are the example of allowable expenses, what are the example of disallowable expenses. In the case of provision for bad debt, specific is allowed. Specific provision for bad debt is allowed. But in the case of general, it is disallowed. Do we understand?
Yes, sir. Was there any provision?
Which other one again? After general provision for bad debt, which other one?
Charges.
Define. Okay, charges.
Bank charges, allow or disallow? You pay bank charges.
Disallow.
Allow.
Allow. Payment for fine for industrial pollution. Is it for your business now? It's supposed to be allowed.
No, it's disallowed.
Why is it disallowed? Is
Disallow.
it not for business?
I did. Because what's it called? The fine in question is what they can, what's it called? They
You are
should
right,
have
my
paid.
brother. Anything fines and penalties. Either you spend it for business or you spend it for anything. Anything fine and penalties is disallowable expenses. Do you understand?
Okay.
Do you understand? So it
Yes.
is disallowed. Anything fine and penalties is disallowed.
Okay.
Any other one again? Any other expenses again? Any other expenses again? Other expenses allowed. Do we understand? So we don't have any other expenses again. Note A has been treated, Abby. Note B has been treated.
Yeah.
Note C has been treated. We are here to treat note D and E. So since we don't have any other expenses again, let's go to the income side. For the income side, do we have any non-taxable income? Income that will not be subjected to tax from this income? Do we have non-taxable income? Yes, we have one. Who can tell me the one that we have that will be treated as a non-taxable income?
Profit from
Profit from
Profit.
disposal of two motor vehicles.
Profit. When you dispose an asset, if you make profit, that profit is not subjected to personal income tax or subjected to income tax, company income tax. That profit will be subjected to what type of tax? Capital gain tax. Capital gain tax. Do we understand? So this profit on disposal of his asset under personal income tax and company income tax, we treat them as a non-taxable income. It's going to be treated as what?
A non-taxable
income.
So if you look at my disallowable expenses, what are we doing to non-taxable income if you want to compute adjusted profits?
You less.
You
less
less it.
non-taxable income. You can see under my non-taxable income, I put profit on disposal of 2 motor vehicle and I less it. Do we understand? So if you look at my computation, net profit, I had the income that was omitted, which is that 1.2 million. I also add disallowable expenses. My total disallowable expenses is 10,530,000. And now less non-taxable income 1.8. So I'm getting adjusted profit. How much is my adjusted profit?
17
17
17
million.
million 170. 17 million 170. That is the adjusted profits. After adjusted profit, what do we less from adjusted profit? Before that profit will be
Capital
subjected to
allowance.
capital allowance. Do we have capital allowance in this question?
Yes. E.
Okay, how much is capital
D.
allowance?
Yes, sir.
150%.
150% of the value of depreciation.
How much is depreciation in this question?
Position is 420.
So 150% of 420.
$630,000.
So your capital allowance is going to be 630,000. Can we all see that? So your taxable profits is going to be 16 million 540,000. That is your taxable profits. So your tax exempt from your taxable profit, you less tax exempt. In this question, do we have tax exempt at all?
Yes.
Yes,
Which
sir.
tax exempt do we have?
We have policy, assurance policy.
Life assurance policy. How much is the tax exempt? How much is the premium pay?
1,500,000.
On 1st April 2023.
So you less it. So this 1,500,000, when do we pay it? When did we pay it? It was paid in
On 1st of April 2023. April.
1st of April 2023. How many months will belong to 2023 there?
That is 9 months.
9 months. We have to prorate it.
Yes.
It has to be prorated. 9 months. Nine months belong to 2023. It has to be prorated. 9 over 12 times 1.5, Abby?
Yeah.
So it's going to give us how much? 1,125,000. 1,125,000. When we less tax exempt on that total profit, we are going to get gross income. We are going to get what?
Gross income.
Gross income. And this gross income, our gross income is 15,415,000. From your gross income, what do we minus? From your gross income, what do we minus? We minus tax relief.
Tax relief. Yes, sir.
So tax relief. How much is the tax relief? How do we get the tax relief? Consolidated relief
Higher
allowance.
of 1%. Yes.
higher of 1%, higher of
100,000 or
either
1% of
200,000
gross
or
income.
1% of gross income, and
Okay.
200,000 is higher.
Okay. We take 200,000, Abi,
Then plus 20% of gross
20%
income.
of gross income. 20% of gross income. We take that. So our 20% of gross income is 3,083,000. When we plus the two together, it will give us 3,283,000. We minus it from the gross income. That means our chargeable income will be what? Our chargeable income will be what?
12,132,000.
12,132,000. From this chargeable income now, we can now compute our tax liability. From the chargeable income, we can now compute what? Our what? Tax
liability.
So what is, how do we compute our tax liability? First 300,000 is going to be taxed at what percentage?
7%.
21%. 7%. And it will give us 21,000. Abi?
Yes, sir.
Second 300,000 is going to be taxed at what percentage? 11%. And it will give us 30 what?
33,000.
Next 500,000 is going to be taxed at what percentage? 15%. And it will give us how much? 75,000. Next 500,000 is going to be taxed at what percentage? 19%. And it will give us what? 90 what?
95,000.
Next 1.6 is going to be taxed at what?
21%.
And it will give us 336,000. What will be the balance? What will be the balance? How do we get the balance?
It's
How do we get the balance?
income minus 3,200,000 times 24%.
How much is the balance? That means 12,132,000 minus 3.2. It will give us
8,932,000
at 24%.
To give us 2,143,680 naira.
So that is that. At the end of the day, the total tax is going to be how much? 2,703,680. Abi? 2,700,000 and what? 703,680. That is the total tax liability. That is the tax Mr. Agim is supposed to pay. However, some of his income attract withholding tax. Some of his income attract withholding tax. That means withholding tax will have been deducted on some of his income at source. Look at his income. Which income do you think will attract withholding tax? That if the person that want to pay the income want to pay it, he will deduct withholding tax. Which income? From this is income. Oh yeah. What are the income that attract withholding tax here?
Legal service.
Legal service. Rent too attract withholding tax.
Then the rent, yes, the gross amount.
So for rent, its own withholding tax is 10%. 10% of that. How much withholding tax do we get on
that
rent?
Is 1,200,000.
We minus that. Legal service is a professional service. Its own withholding tax is 5%. 5% of this 6 million. 5% of 6 million. What do we get?
300,000.
300,000. We less withholding tax on legal service. We also less withholding tax on rents. That means the net tax due, the net tax this man will pay is what?
1,203,618.
So that is the tax Mr. Agin will pay. Do we understand?
Yes.
Do we understand? So do we have any questions so far?
Sorry, please, sir. Can you hear me?
I can hear you.
Yes, I wanted to ask about that legal fee and legal service. I think you disallowed it. I don't understand.
Is
I said I don't understand that part, that legal service. I thought like you disallowed it.
legal service.
Yes, the professional service. Go up first. Let me go up, sir. Wait, wait, wait. You fast it. I wanted to, like the solution.
Which one are you talking about?
Your solution. Go to your solution, sir. Wait. This purchase of legal books. That's what I wanted to ask.
We disallow it because it's a capital expenditures. We disallow it because it's what?
Capital expenditure.
Yes.
Okay.
When you buy legal book, you can't use it for 1 year. You have to use it for so many years now. So that is the reason why we disallow it.
Okay, sir. So I wanted to ask, I think you said something like doubtful debt, that if it is specific, we are going to allow it.
Yes. If it is general, we disallow.
Okay, okay.
Do we understand? So that will take us to the next area. The next topic we are looking at today is called
Sir,
stamp. Yes.
sir, please, why computing a personal income tax? When you were teaching, you made mention of that there are earned income and unearned income,
Yes.
and dividends, rents, all these are unearned income. But in this question, we didn't recognize those unearned income here. I don't understand. Just
We recognize it. Rent is an unearned income. We recognize it. Rent is an unearned income. We recognize it. The only unearned income we have in this question is rent, and we recognize it. It's part of his income now.
okay.
Yes. We recognize it.
Thank you.
So the next topic we are looking at is called stamp duties. Stamp what? Duties. Stamp duties. That is the next topic we are looking at. Stamp duties. What is stamp duties? The word stamp means an impress or a mark or a ink that is putting on a document. So when we talk about stamp duties, it means a levy a levy. Stamp duty means levy or tax imposed on a written document. An electronic transaction. Stamp duty is a levy imposed on a written document or an instrument. It's a levy that was imposed on instrument or written document. An electronic transaction for the purpose of making it a legal binding or serve as an evidence in the court of law. The word stamp duty means a levy imposed on a written document, an electronic transaction for the purpose of making it a legal what? A legal binding or serve as an evidence in the court of law. Stamp duty, like I said, we normally impose it. It's a tax that will be paid on a written document or electronic transaction so that you can use that document as an evidence in the court of law. Now, what are the type of stamp duty we have? We have two types of stamp duties. We have fixed stamp duties and second one, ad valorem stamp duties. We have fixed stamp duties and ad valorem stamp duties. What is fixed stamp duties? Fixed stamp duty, they are the duties that does not vary. This fixed stamp duty is a duties that does not vary based on the consideration of the document being stamped. The duties that does not vary based on the consideration of the document being stamped. That is called fixed stamp duties. It does not vary based on the consideration of the document being stamped. That is what is called fixed stamp duties. It does not vary based on the consideration of the document being stamped. That means, irrespective of the value of the document, you are going to pay the same amount of duties. Either the document worth 200,000, you are going to pay the same amount. Or if the document worth 300 million, it's the same amount that you pay with 200,000 document that you are going to pay for the one of 300 million documents. So, example of fixed stamp duties. Number one, power of attorney. Power of what? Attorney. Certificate of occupancy. Certificate of what? Occupancy. Memorandum of understanding. Memorandum of what? Understanding. Another example, joint venture agreement. Joint venture agreement is also another example. Guarantor form is also another example of fixed stamp duty. Proxy form is also another example of fixed stamp duties. Ordinary agreement receipt. All these, they are example of fixed stamp duties. Power of attorney, certificate of occupancy, memorandum of understanding, joint venture agreement, ordinary agreement receipt, guarantor form, proxy form. They are all example of fixed stamp duties. Now, ad valorem stamp duties. ad valorem stamp duties. Ad valorem stamp duties. What do you understand by this ad valorem stamp duties? This is a stamp duties in which the amount varies based on consideration of the document. Ad valorem stamp duty means the amount of stamp duty you are paying is going to vary based on the value of the document. If the value of the document was 20 million, the stamp duty is going to be high compared to value of the document that was the 100,000. The stamp duty you are going to pay on the value of document of 100,000 will be lower compared to the stamp duty you are going to pay on the document that the value was 20 million or 2 million. So that is ad valorem stamp duties. Example of ad valorem stamp duties. What are the examples of ad valorem stamp duties? Deed of assignment. Deed of what? Assignment. Example of ad valorem stamp duties. Tenancy agreement or lease agreement is also example of ad valorem stamp duties. Sales agreement is also example of ad valorem stamp duties. Insurance policy. Insurance what? Policy is also example of ad valorem stamp duties. Share capital of a company is also example of ad valorem stamp duty. Mortgage loan is example of ad valorem stamp duties. Debentures loan is also example of ad valorem stamp duties. Promissory notes is also example of ad valorem stamp duties. All these are example of ad valorem stamp duties. Let me repeat again. Number one, deed of assignment. Sales agreement, number two. Tenancy or lease agreement, number three. Insurance policy, number four. Contract agreement, number five. Contract note, number six. Mortgage loan, debentures loan, share capital of a company, promissory note. These are all examples of ad valorem stamp duties. You may be asked in an exam, if the examiner asks you, what are the instruments subjected to stamp duties? They're asking you for the example of a stamp duty document. They can ask, what are the documents subjected to stamp duty or instruments subjected to stamp duties? The examiner did not ask you either to list, feast, or ad valorem. You have a right from any of the type, feast. If there are 10 instruments subjected to stamp duties, the examiner did not ask you to list ad valorem or feast. You can take for any of them. You can take for any of them. That means you can take part of ad valorem, you can take part of feast. But if the examiner is specific that you should list 10 documents of ad valorem, you have to stay in ad valorem. Or list 10 documents of feast, you have to stay in feast. Do we understand? Now, the next thing we need to look at is methods of stamping. What are the methods of stamping a document? What are the methods of stamping? Method of stamping a document. What are the methods of stamping? Method of stamping. Or, no, let's look at administration of stamp duties in Nigeria. Administration of stamp duties in Nigeria. Administration of stamp duties in Nigeria. For the administration of stamp duty is administered by both FRS and State Internal Revenue Service. If the transaction is made by an individual, the stamp duty will be administered by State Internal Revenue Service. But if the transaction is made by a company, the stamp duty is going to be administered and collected by Federal Inland Revenue Service, now called Nigeria Revenue Service. So these are the administration of stamp duties. Stamp duty is administered by both Federal Inland Revenue Service and State Internal Revenue Service. If the transaction is made by individual, the stamp duties will be administered by State Internal Revenue Service. But if the transaction is made by company, the stamp duties will be administered by Federal Inland Revenue Service. Now, time for stamping of instruments. What is the timeline for stamping a stamp duty instrument? If you want to stamp a document or a transaction, what is the timeline? The timeline for stamping an instrument depends on the type of the instrument. The timeline for stamping an instrument depends on what? The type of instrument. If the instrument is a fixed duty instrument, if the instrument is a fixed duty instrument, the instrument must be stamped within 40 days from the date of execution of the transaction. Let me repeat again. Timing of stamping an instrument depends on the type of instrument. If the instrument is a fixed duty instrument, the instrument will be signed, will be stamped within 40 days from the date of execution of the transaction. But if the instrument is ad valorem, the instrument must be stamped within 30 days from the date of execution of the transaction. That is timing of stamping an instrument. Now, what are the manners of denoting stamp or method of stamping? What are the manners of denoting stamp or method of stamping? What are the manners of denoting stamp or method of stamping? Manners of denoting stamp or method of stamping. What are the manners of denoting stamp or method of stamping? Number one is employing a die impress on an instrument. Number one is employing a die impress on an instrument. That is called adhesive stamp. That means you put an ink on that document to show that the document has been signed, has been stamped. Do we understand? Hello, are you with me?
Yes, sir.
So, manners of denoting stamp duties. Number one is employing a die impress on an instrument. That die impress is called adhesive stamp. It's just like a ink. Just put a ink stamp. There is a stamp that you have made. You just put it in the ink. You now stamp that document. Another one, affixing a printed adhesive stamp. Affixing a printed adhesive stamp. What does this one mean? This one is used by the post office. Post office, they normally sell a stamp, printed stamp. At the edge of a letter, they will now put that printed stamp. That printed stamp, they will write Federal Republic of Nigeria and so on like that. So you just remove the stamp and put it at the edge of the letter. It's just like a paper. Do you understand the printed stamp I mean? The ones that post office normally sell, Nigeria Postal Service. Do you understand that?
Yes, sir.
Another one, direct electronic printing. Direct what? Electronic printing. Direct electronic printing simply means you print, you put the document in a particular machine, and the document was printed with some word or some document, some sentence as a means or as an evidence that the document has been stamped. That is called direct electronic printing. We have another one, electronic tagging. Electronic tagging means you put a code on the document, a number on the document. Another one is issuance of stamp duty certificates. Issuance of what? Stamp duty certificates. You give certificate on that stamp duty. When the person paid the stamp duty, this one is relating to certificate of occupancy. When you pay stamp duty on C of O, they will give you stamp duty certificate. Issuance of stamp duty certificate is another method of stamping or manners of denoting stamp. Another one is acknowledgement of payments. Acknowledgement of what? Payment. You acknowledge the payment of that stamp duty. By acknowledging it, that means it's an evidence that the document has been stamped. That means it's an evidence that the document has been stamped. Acknowledgement of stamp duties. By acknowledging it, shows evidence that the document has been stamped. These are the manners of denoting stamp. Please, ladies and gentlemen, let's pay attention to this area. Number one, employing a die impress on an instrument. Number two, affixing a printed adhesive stamp. Number three, direct electronic printing. Number four, electronic tagging. While number five, issuance of stamp duties certificates. Do we understand? Do we understand?
Yes, sir.
Yes, sir.
Hello, are you with me?
We are with you, sir.
Yes, sir.
Understood.
So these are the manners. Penalty for late stamping. If you fail to stamp a document or you stamp a document late after you have executed the document, after the timeline, what is the penalty for late stamping? We know the timeline for stamping an instrument. But when you fail to stamp the instrument within the timeline, what is the penalty? Number one, when the stamp duty amount is not more than 20 naira, the penalty for late stamping will be 20 naira. Number two, when the stamp duty amount is more than 20 naira, in that case, the penalties for late stamping will be 20 naira plus 10% interest at prevailing commercial rates. When the stamp duty amount is more than 20 naira, the penalty for late stamping will be 20 naira plus interest at prevailing commercial rate. That means the interest at 10%. So when the stamp duty amount is not more than 20 naira, the penalty for stamping is going to be 20 naira. When the stamp duty amount is more than 20 naira, the penalty for stamping will be 20 naira plus interest, 10% interest per annum. Do we understand? And that penalty of 10% per annum, that penalty is going to stop when it is after 10 years. That means when that 10% is now 100%. a penalty will be stopped. So that is what we need to know on penalties for late stamping. The last for today is, what are the instruments exempted from stamp duties? What are the instruments exempted from stamp duties? What are those instruments that, if you do transaction on those instruments, you will not pay stamp duty on the instrument? What are the instruments exempted from stamp duties? What are the instruments exempted from stamp duty? Number one, admission as a military advocate. You collect an admission form to join a military. You don't need to pay stamp duty on that admission form. Do you understand? Even in Nigeria, military form is free. You don't pay. You want to serve the community. Affidavits or declaration of age. If you go and do affidavits in a court, or you declare your age, whether maybe you lost your birth certificate, you don't need to pay stamp duties. Agreement or memorandum for hire of any laborer. You do a memorandum, you do an agreement, you want to hire a sales girl, a laborer that will work with you. On that agreement, you don't need to pay stamp duties. Do you understand? Another one, note or bill issued by central bank. The note or bill issued by central bank, you don't need to pay stamp duties. Do you understand? Transfer of shares, transfer of government shares too, will not attract stamp duties. Transfer of government shares will not attract stamp duties. So all these are the documents that will not attract stamp duties. So ladies and gentlemen, I have something to attend to. So this is where I'm going to stop today. Do we have any question?